Yo, what's up, everyone? Welcome back to Investing with Homies, coming at you today on January 24th, Market Monday. What's up, everyone in the chat and those tuning in for the replay either on YouTube or Twitch? My name's Curtis, and we are joined today with the homie Russ, aka Dapper Dividends. What's up, Russ? Thanks for joining us tonight,
What
my dude.
what is up, man? Glad to be here.
Yeah, so Russ has a YouTube channel, you guys. Definitely go check it out. I dropped the links in the Discord. Here's what it is right here as well. This homie, you've been posting content for about a year, a little over a year, I believe, right?
Yeah, I pretty much started it, had no idea what I was doing. I thought I did. And I started it right during the pandemic when a lot of other people did in March, I think March of 2020, maybe April. And
Definitely.
yeah,
Yeah,
yeah.
man, I was checking out your page and I really liked a lot of the content on there. And so I thought it'd be great to bring you on Investing with Homies and have you, share some of your insights with all the homies out there. It's always good to have multiple perspectives, of people with different backgrounds, different investing styles, because not everyone's investing style will work with, like, say, my style or with another homies. So, and I know you focus more on dividends, which is definitely not my expertise. So that'd be really
Yep.
interesting to hear. So could you maybe start by giving us just like a little background, like on you, maybe like when you started investing, and yeah, just kind of like your journey to kind of where you are now, type deal with investing.
Yeah, sure. So I've been contributing to a 401k since 2003. And I just had that money always going in. I didn't really pay that much attention to it, but I've always been interested in the markets and in just investing in general. But I wanted to get a little bit more involved. So around early 2018 is when I got on Robinhood because it was free. Somebody told me about it. I was at a party. They said, get on Robinhood, no commission. And I started with penny stocks. And the reason that I am a dividend growth investor is because of a company called Helios and Matheson, ticker HMNY. So they bought MoviePass. I don't know if many people will remember MoviePass, but they did terrible. It wrecked the company. They couldn't afford it. Complete mismanagement. And I was putting more money as it kept dropping. So people kept selling out of it and I kept buying more. And it was just a debacle. And I was losing sleep.
I'm
So
sorry,
I,
what was the
oh,
ticker?
HMNY, Helios and Matheson.
Oh,
It's gone. I know they went bankrupt.
oh, it's gone off Robinhood now.
You probably have to Google it
It's
if you
all
yeah
good,
if
man.
you
We've all been there. My first stock was also a penny stock. It was like MCOA. It was some random cannabis stock, and that one's like gone too now.
if you can go to Google. I mean, they weren't a penny stock when I got in. I started buying them around $4 a share, and it well, I guess they are still trading,
So
but
they're like, is that like 2 cents or
Mike,
less than a cent?
it's a micro penny stock now. But
Micro
anyway,
penny.
so
Yeah,
yeah,
no
so the
worries.
point is that I was losing sleep and I was waking up in pre-market to check the stock price and just see if it was going to start going up. And I thought, you know what, I can't do this. Now, my grandfather, he was an investor, and unfortunately, I never really talked to him much about stocks. So I do remember him talking about dividends and having companies like Walmart and Johnson and Johnson, AT&T, those
Mm-hmm.
type of companies that pay a dividend. And I thought, like, what? There's got to be something to this because I don't remember him talking about being tired because he was up worrying about stocks all night. So
Yeah.
that started the rabbit hole. I started looking up dividend stocks, and one thing led to another, and then it fit me like a glove because when I buy something, I have a tendency to be married to it. I tried trading, I tried swing trading,
Yeah.
and the good thing is that I learned how to read a chart, but I just couldn't conquer my emotion. And I always wanted to just hold on to the thing so long. And then I
That
found dividends. And basically, there's all you have to do is buy and hold and never sell and then just buy more. And I was like, dude,
yeah.
I can do this. I can do this.
Yeah, I totally get that. Falling in love with the trade, that's a common quote I think people go by. It's like, yeah, don't fall in love with your trades, sell them, take the profits, but it gets so hard because usually for me too, I'm the exact same way because when I invest into any company, even if it's going to be a trade, I have to somewhat believe in that company or at least believe that it's undervalued and that its valuation deserves to be higher. And then once you start going up, you're like, oh, the valuation still can go higher and higher, and you fall in love with the trade and you hold, and then it gets beat up. But
Yeah, and
yeah,
that's why I learned that, they said you have to know before you buy, you have to have your entry and your exit and your stop losses, know when you're going to get out, what your targets are. And I couldn't do it because every time it kept going up, I never wanted to sell. I wanted to let my winners run. So then it would
yeah.
come back down and then it would start getting towards that stop loss when you're supposed to sell. And I would pull it because I was like, no, I know it's going to go just below it. And then it's going to blast right off, and I would keep going down. I would throw more money in. So yeah, trading
It's
wasn't for me, but dividend investing, I can buy and I can hold and never sell.
definitely, and it can be rough too, depending on the year you're doing those trades. Like all the people that started trading in 2020 for like that year, like all of them are geniuses. You know what I mean? And
Yeah.
it's kind of just skewed a lot of people's mindset around trading, I think. And not to be against trading or anything like that, but it's just a lot more difficult timing things up and then timing them down. You have to time things multiple times instead of just like you're saying, buy and hold and just continue to buy and hold over a long period of
Well,
time.
there's an analogy that it's like a bar of soap. The more you handle it, the more it gets worn down. So I think that's pretty true for the market as well. And, I know you're a younger investor, which is awesome. I love it. But there's a lot of people that have never lived or traded through a recession or a bear market. So the ones I
Yeah.
vividly remember, I remember the dot-com bubble. I'm a little bit older. I'm going to be 44 in April, but I remember I wasn't trading, but I knew I had a very good friend that was day trading, and he kept telling me, he's like, dude, you just got to buy something with .com. He's like, the internet, that's where everything's going to be.
Hmm.
It's crazy to say that now.
Yeah,
And I never got into it, but so I remember the .com crash and then 2008, 2009 when that all hit. So,
totally,
but yeah,
totally.
but I know, but it's good living through it because I know that it always recovers over the history, the life of the market. It always goes up and to the right. If you pull back, if you look, there's a couple charts online. You can look back to the 1870s, just always goes up and to the right. There may be punctuated years where it's fallen a little bit, but it always recovers.
Yeah, that's the great thing about long-term investing. Um, and it's like for those that try to like time themselves in and out of the market completely, like say selling your whole portfolio and just trying to like get back in when you think it's a good
That's
buying
crazy.
opportunity. Um, I think I forgot what the exact quote is or the exact statistics, but basically for those that hold long term, they avoid missing out on the biggest upside days of the market. Like say the market moves 50% in a year, and let's just say like majority of that 50% happened on like 4 days of the market, and you weren't invested in those 4 days because you were trying to time the market. And most people will miss out on those 4 big days of the year by trying to time the market. So statistically, you're at a disadvantage when you do go into trying to time the market. Um,
Yeah.
but yeah, and like you're saying with market cycles, that's another important thing too. Is what I tell people is just start right now. It doesn't matter how old you are, because if you start right now and instead of starting 5 years from now, you'll have 5 years of experience under your belt. And like the market goes through a cycle. Generally, like every 10 years, there's a recession or whatever. I know since I started in 2016, 2017, every single year I've seen a bubble pop, a different type of cycle, whether it was 2018, the cannabis stocks, whether it was watching the crypto stocks in 2017. And I can't think of anything else right now. I mean, actually, yeah, I can. The
I,
retail investors, the Corona drop, the momentum stocks, like everything in the last few
I think
years.
I think we're going to see two other bubbles: the SPAC bubble, and then I think EVs. And I've talked with people that don't think EVs are, but it's just some of these valuations are insane. I mean, Rivian, I think at one point right after they IPO'd was the third by market cap. I think they were the third largest auto manufacturer in the world, which blew my mind
Wow.
because
Yeah.
they didn't even have any products out yet. No
Mm-hmm.
sales, no revenue, which tells me this is kind of crazy. And yeah, I don't know how you feel about EVs.
Yeah.
I
Yeah.
invested in Neo. I know that's one of my play stocks, not a dividend company, but that's just
Mm-hmm.
something completely that I've actually done well on. But I did
Nice.
have pain with that. But yeah, with the EVs, I'm not as hot on them because they're still just automobiles. They're just the combustion engine is being replaced by the battery, by the EV battery. I mean, it still has a drivetrain and rubber
Hmm.
tires and windshields and a steering column. So,
Yeah.
um,
So yeah, no, totally.
yeah,
I agree with you because there's an oversaturation of EVs, like we saw with Nikola. I don't know if you remember Nikola. Like that's we traded that one
yeah.
as a group. I remember, and we made money, luckily. But like, still, it
What was
was
his
just
name? Trevor
yeah, Trevor
Milton, was it?
Milton. Yeah, the scam master or whatever his name was. But so like for me, Tesla is my number one position. It has been for a
Nice.
very long time.
Yep.
It's larger than like my second largest position by a huge margin. And I didn't do that on purpose. It kind of did that on its own. I invested
Yeah.
in Tesla. I got it a couple years ago under $100 a share before any stock
Oh,
split.
nice.
Yeah,
Oh,
and
nice.
so I have like almost 1,000% return on it. It's down to like
Yeah.
800 right now because
Yep.
of the recent dip. So I just held, and it became a really large position. It's my number one. I believe in Tesla. The valuation is definitely always going to be argued. What I've learned is to value Tesla less as an automobile company and more as a tech company. Because it's like in an Amazon type of situation where it's always going to have a
Right.
justifiable reason that it's overvalued, but the exponential growth for the company is going to be there going into the future. Tesla, or in any EV stock, you want to look for is the autonomy capability, and out of all the EVs, Tesla does have the highest level of autonomy. You can only achieve that by having your cars on the road for years and years, gathering
Yeah.
data
Yeah.
and that sort of thing. So that's why Tesla is definitely ahead, and so Tesla's my number one, and then Neo is my number two. Those are my only two EV stocks that I choose to invest in. Neo, I like it
Yeah.
because I invested in it back in the day too as well. I
When did
did
you get Neo? I,
no,
I got
not
it the second day of the IPO.
dude. I used to have Neo. I traded Neo when it was like $6 and stuff, and like made some money here and there. But I sold out, and then I think I bought back in like around $20 or $30. I might actually be down on
Yeah.
Neo as of right now. My long term position, but I did trade it and whatnot. But I like Neo because they have a unique play in China's market. China being
Mhm.
super sketch as of late. I kind of pulled out of all my other China stocks, so I think Neo's my only China stock as well. But yeah, Neo has that interesting aspect where they have this rechargeable, swappable battery.
Yep. The swap
Um,
stations.
yeah, and so that's I think going to be huge. Like I like Neo because they're probably going to be a top three player in China. China being the largest EV market. So yeah, those two are my favorite. And then the third EV like aspect I invest in is an FCX, which is Freeport. They might actually offer a dividend. I'm not too sure off the top of my head right now. I'll try to look at them right now. Let me see.
Yeah, I'm not familiar with FCX.
FCX, they're the largest producer of copper. And so
Oh,
basic,
free. Okay.
yeah,
Yeah. Yeah.
Freeport. Um,
Yeah.
they
They
have
got
a
a yield,
yeah,
small yield.
small yield.
It's something
Um,
though.
yeah, yeah. So like everyone's talking about all the rechargeable batteries and stocks and stuff, and I'm like, you know what? How about just invest in the metal that's going to be in all the batteries, all the recharge
Right.
stations, and all the electric vehicles moving forward? Because there are mandates in China, and I'm not too sure. I think mandates are coming to the U.S. or they already are for like full electric vehicles.
Yep.
Like no more combustible engine vehicles, and so EVs are the future. And so
Yeah,
those are like, yeah, those are my three
Volkswagen by
plays.
2030, Volkswagen by 2035, I believe they said they're not going to be producing any more ICE, internal combustion engines. And yeah, it's hard. I love it. No, I love Tesla. I mean, maybe I'm a little bit sore because I had some shares around $200 and then I just
Yeah.
I don't know. I thought I bought into that Elon was a just this hype master, and the
he
company
is. He
had
is a hype
issues, which
master.
they did have issues, but and it was like you said, sketchy there for a minute. But I mean, hey, everyone that's bet against Elon so far has been wrong. So
Yeah.
it's I sold. I took a small
Dude,
gain and I got out. I
Elon's
thought I was being
crazy.
smart.
He even came out like a month or two ago and was like, Tesla's overvalued. Like saying his own stock's overvalued. You know what I mean? So it's like, I don't know. I respect Elon and what he does and stuff, but he's definitely like a troll in a way. Like he does a lot of troll things,
Yeah, yeah.
I can't really complain though, being a Tesla shareholder, just holding long. And
No, my daughter
Tesla right
holds
now
Tesla.
under
Yeah.
900. I
Yeah.
mean, actually, what we should look at instead of like the stock price is more of its valuation. So what's according to Robinhood, which Robinhood doesn't give you the best information, but it is quick and easy right here.
Yep.
$933 billion market cap, so it's under its
Right.
trillion at the very least. And I was like promoting Tesla forever, like yo, buy it before it passes a trillion. So it's now back under a trillion, which is
Yeah.
nice. If it can go back to like 7 or 8, I'd say it's a good buy in my opinion.
Yeah.
They just had like so much good news come out for Tesla like before all these drops just happened. These drops aren't just because Tesla's doing bad, it's just the overall market is having some issues with overall sentiment, I think, right now, right? What are your
Well,
thoughts
yeah.
on the market right now? Like we've seen a lot of red days recently, right?
Well, as a dividend growth investor, I love it. I get so excited when I see red days, and I was actually a little bit disappointed to see that the market today. I think the Dow was down almost 1,200 points at one point, and it all the big three recovered green. So the S and
Mm-hmm.
P, the Dow, and the Nasdaq all finished back in the green, which was a little bit surprising that it was such a such a I don't know, whipsaw day, I guess.
Yeah, we
And
saw that with Tesla too. I like woke up, saw Tesla slow down. I was like, "Oh, going back to bed."
yeah,
And
but
then it
I
recovered.
love it, and it's just normal. It's natural. I mean, we have rate hikes coming. Obviously, that's what people are freaking out about, and the growth companies get hit the hardest, obviously, because they are, well, maybe not obviously to some, but they're living on cheap money. A lot of these companies that are growing, they're not self-sufficient yet. They can't sustain themselves through their profits and the money they're bringing in. So they need to either issue shares and dilute shareholders, or they need to just keep borrowing more money. And it's kind of a race against profitability, which Tesla beat it.
Yeah.
They're profitable now. So with the money being a little bit more expensive, and future cash flows, that's going to affect that. So the they get hit the hardest, and that's why there's the whole flight to safety thing. And now a lot of my dividend stocks are like Pepsico is one of my favorite, and
Oh,
the damn
nice.
thing just keeps going up. It will not stop going up. I want to get it again in the 160s. And so I've been doing a little experiment with PepsiCo. I started buying. I wanted to get to 100 shares and make it a core position. Yeah, see, it just there's a little dip there, but
Yeah, it's actually
it's just
done very good over
yeah,
the last 3 months. You know, of it not dipping
right.
at all really during those times. Yeah, like
And
you
I'm
said,
waiting.
when there's times of fear in the market, a lot of people do like to fly to either big tech stocks, or like just safer stocks in general, like dividend stocks, even things like gold. I wonder how gold's doing. I haven't even checked on like what gold's been
Gold
up to.
was up a little bit, like $3 today, I think. It was up
So
just a
gold's
tad.
gold's been relatively neutral through this. It was up, but it did have a nice
Barrick
little
Gold,
pullback.
nice.
Yeah, Barrick Gold
GDX, I think is Barrick Gold's good. The GDX is tracks the
a little bit better.
yeah, that's more reflective of.
Yeah, that
Well, that's
Barrick's.
the gold miners. Or
Yeah,
no, it's GLD. I'm sorry, that's the miners ETF. Try GLD. That
GLD.
tracks the price of
Oh, you're
the
right.
Spider Gold Trust.
You're
There we
right.
go.
There it is. Okay, and they're up over the 3 months. Nice. Yeah, well, we
Yeah,
looked.
so
Barrick Gold's
this
the miner, not the actual gold.
Yeah, see, they hold gold bars in the London vaults, so it's backed by gold too. So this is one of the better plays if you wanted to buy gold and you don't want to hold it in your house. It's a little
Totally.
bit more liquid, but yeah, I love it because when the market goes down, when the beautiful dividend stocks I love buying, when they go down in price, their yields go up. So it's a great way to get more bang for your buck. And it's why most dividend investors, we just love. So in March of 2020, when people were freaking out, I I ran out of money. I was contemplating like taking out a personal loan from the bank because I was like, this is crazy. Like,
Mm-hmm.
buying Caterpillar at $90 a share, and uh, it was
Yeah.
ridiculous prices. I mean, for some of these
when
great companies.
when I my catalyst that made me buy back in during the pandemic was seeing Boeing go under $100 a share. When I
Oh
saw
yeah,
that,
yeah.
I was just like, dude, it hasn't been this price in 7 years. It's the largest government-backed workforce company, and I was just like, damn. So I bought into that, and so I have a nice position in Boeing still, even though I'm not really like I don't even really follow the company anymore. It's just like I bought it at that
Yeah.
low price, so I kind of have to hold no matter
Well,
what, really.
they cut their dividend, so we're still waiting for Boeing. I don't own them, but we're still waiting for Boeing to reinstate a dividend.
Yeah, a lot
And
of dividend cuts during the pandemic was pretty bad. A lot of companies were getting rid of their dividends. What was that? Were you already doing dividends by that time?
oh yeah, yeah. So I think there was in the pandemic in 2020, right after, I think there was about $40 billion in dividends that were pretty much eliminated, cut. Um,
Yeah,
and then since in 21, I think it was 70% they were up. So they more than recovered with companies um, getting back to norm, kind of reverting to the mean. But yeah, I was dividend investing, and again, that's I thought
Did you
this
have to
so
like kind of like change your strategy during that time? Or did
no,
your
not at
dividend
all.
stocks not get affected by that?
No, because what I do is so there's kind of two different there's dividend investing and then dividend growth investing. So with dividend growth investing is we look for companies that consistently raise their dividend every single year.
Yeah.
So there's you may have heard of dividend aristocrats. They're companies that have increased their dividend for 25 straight years, and then there's dividend kings that have increased their dividend for 50 straight years. And PepsiCo, by the way, is
One of them.
this they'll become a king this year. They're at 49 years. But yeah, you
Nice.
like Johnson and Johnson, 3M. I mean, if you just go back, look throughout the
Go to
years through.
dividend.com, right? And look them
Yeah,
up and
I
look at their
yeah
history.
yeah. I usually use like Seeking Alpha is free. Nasdaq.
Seeking Alpha.
There's a
Okay. Yeah.
yeah, there's a bunch. But yeah, so we're looking for companies. McDonald's is another one. Like I was buying McDonald's heavy during the pandemic. So we're looking for companies that constantly increase their dividend and they
Nice.
raise it. So they're a lot more safer. They have a lot more stable cash flows. They have usually have good balance
So
sheets
how
because they're able to keep paying that dividend.
so those companies were able to increase dividends through the pandemic.
Yep. Yeah, they didn't cut.
Nice.
They didn't cut. Most of the big blue chip companies kept they kept their dividends. They either maintained it or raised it. Disney was a company that cut it. They eliminated it. They still haven't
Yeah. Yeah.
reinstated it.
I think
So
Disney's transitioning more into a different type of a company too at the same time though, They're like
well, they have a huge amount of revenue that comes from their entertainment from the parks, and the
yeah.
parks had to shut down, and they weren't really into the streaming yet. So
Now
it
they've
really
transitioned, yeah.
yeah, they're trying to. I don't know if they'll be able to keep up with Netflix, and then one of my favorites, Warner Media, which is coming. I say coming because I don't know if you guys have talked about it. It's more
I
of a
haven't.
dividend thing,
I
but
haven't.
yeah, AT&T currently owns Warner Media,
Yeah.
and they merged with Discovery, and it was in the news, and they're spinning off Warner Discovery into its own entity. So shareholders of AT&T are going to get shares of Warner Discovery when that launches by itself. And yeah, AT&T has just been beaten down hard. I mean,
Yeah, man.
that's probably
AT&T was one of my favorite dividend stocks, but I'm not in it right now just because I knew there was kind of like a downside still to come. I mean, it's looking a lot better for a buying opportunity right now for sure.
right. Well, in the telecom sector, there was all the big three are down. The big three in the US are AT&T, T-Mobile, and Verizon,
Yeah.
and they've all had their issues. I think there's consolidation. Yeah, VZ is Verizon. So yeah, they've all been pretty much on a downtrend.
Yeah, definitely. AT&T is
So
definitely my favorite of those though.
yeah, so a lot of people dumped on it because they're going to be cutting. They had a 7.2% yield, I think I saw right now, and they're going to be cutting that in about half because they're losing $20 billion in revenue from Warner from Warner Media, which is leaving the company, which I'm thankful for because the days of like these big conglomerates buying companies, GE was under Jack Welch, their famous CEO, was famous for doing that, just buying as many things as you could, like trying to make a big blob of a company. But it's so hard for a parent organization to just run all these different companies by themselves. So that's why companies will spin off segments and they call it unlocking value, because then they can run themselves and they don't have to check in with the parent organization.
Yeah,
So we're
totally.
gonna get shares of Warner Discovery. They're planning on spending about $20 billion in new content because they say that they know that new content is king and people want new content. So Disney is a little bit, a little bit stuck with their classics. And I mean, they do have Star Wars. We love it. I don't know if you're a Star Wars guy. We've
Yeah,
been watching
yeah.
the Boba Fett on
I don't I
Disney.
haven't watched it. I'm not that big on Star Wars. I really like Disney though. Disney I think has they own ESPN I believe as
Yep.
well, which I'm my main thing is I'm a super big UFC fan, and I've been investing into EDR Endeavor Group, which they're the people that
Okay.
own the UFC. I'll pull it up. Have you heard of this one before?
I have not. I have not.
Yeah, and so
I
this
love it, man. There's like 3,600 publicly traded companies or something. So there's so
yeah.
many companies I've never heard of.
Yeah, so they recently IPO'd because they made this deal like earlier this year or last year, I'm sorry. And so yeah, and this I'm actually hyped on this stock because like I treat Endeavor and Disney as kind of both my recovery plays, like for like you're saying, like people going back to the parks and that sort of thing. And I'm a huge UFC fan. The UFC is the most fastest growing sport
Yep.
worldwide. It's a worldwide sport. If you look at it, because we bring fighters from all sorts of backgrounds, that sort of thing,
Yeah.
and they're
Yeah.
not profitable as of yet because they still have some money that they need to go through. But I've been looking at their balance sheets and looking at all the numbers and stuff, and by hopefully within a year and a half, they should be profitable. And like my whole thing is, if you invest into a non-profitable company, you have to see a clear road to
Yep.
profitability to be able to invest into it. But I'm actually like really surprised with how it's done. Like over the last 3 months, it's actually up 22% right now. It hasn't done too bad relative to the overall like market and a lot of these like the SPACs. Like I
Yep.
invested in the DraftKings and I got
Yep.
wrecked on DraftKings really hard. That was one of the plays I fell in love with. Look at this bad boy, down 57% in the last 3 months, dude. And like I bought it like right here and wrote it up, and I was like, oh my god, it's going to keep going, and then boom. But I sold right here, luckily, because I'm not
Yeah.
that in
Nice.
love with it, but
Yep.
I still want
That's
to
the
get back
problem
into
with
this. Wow, it's under $20 today. Whoa,
Yeah, that's
that's
the problem with SPACs, though. I mean, I haven't really looked into SPACs that much, but I just know from what I read that there's so many different entities that are basically cashing out, and the person buying the SPAC is the one that the retail investor is
yeah.
giving the cash out, and then people are just selling, and it was crazy. I mean, if you look at that, but like that was clearly a bubble. I mean, there was so many new SPACs just
There
coming out. It
were
was
there were so many, dude, and I mean, most people that trade DraftKings probably don't even know that it was a SPAC. You know what I mean? A lot of the SPACs, like DraftKings, is probably one of those like earlier ones before SPACs really started taking off. But yeah, like I think you just gotta look at each individual SPAC too. But you're right, like the overall SPAC market is just gotten shit on. Any high growth stocks, really, with lower market caps, they've all gotten hurt the most. Higher market cap stocks have had the advantage and are doing good. Homie has a question though. He says, "What causes a company to stop offering dividends, or is it a way to keep more money in the house for the business?"
Well, there's a lot of
Yeah,
reasons that a company could stop. They cut the dividend. Obviously, like we just talked about with Disney, when they suddenly lose a bunch of revenue coming in, so when they have shrinking profits, a lot of companies will try to attract people by paying a really high dividend. So there's a lot of, you'll see this with like business development companies, BDCs, and certain REITs like mortgage REIT companies. They'll offer these crazy high dividends that are
yeah.
unsustainable, like 12, 14, 16%. They maybe can pay that for a year or two, but when they're starting to pay it out of debt, or they'll issue shares every year to pay the dividend, it's not sustainable. So basically the biggest thing is when they don't have enough cash flow. So I love free cash flow. I don't know if you guys talk about that. That's
Yeah,
one of my main
always free
metrics.
cash flow is important. If the company has a nice stack of cash, then you know that they're doing well.
Yeah, because earnings per share can be massaged and manipulated. It can be manipulated by accountants, but the free cash flow, nobody's manipulating the free cash flow because people will go to jail unless IBM is one company that they get, I forget how they get away with it, but they have adjusted free cash flow, which to me is really weird. And it's one of the reasons I
Yeah.
sold IBM because it looked like, now this is one of the things that, speaking of that question, it looked to me like IBM was borrowing money to pay the dividend. So that can't go on forever.
Yeah,
And
for real.
yeah, so basically, if a company has a really high dividend yield and their free cash flow can't cover it, that's probably the biggest red flag that they would end up cutting their
Yeah,
dividend.
I think a company, I definitely agree, and I think a company, they have the right in most cases to just to do whatever they want with their dividends, you know what I mean, right? They
Oh,
have the
it's not, there's no law, it's not obligation. It's completely just the board of governors always, they have to vote on it and they authorize it. So you see the board authorize such and such dividend. But yeah, dividends are completely uh, voluntary by the company. And it's kind
and
of like a bonus way of returning capital to the shareholders who own the business or the business owners.
yeah, when I think of free cash flow, I always think of Facebook, and I always go down here to over on stockrow.com and I just look at their operating
Mhm.
cash flow. And this is cool because it shows you kind of like what's expected for like the next couple of years coming. You can see like where their operating cash flow has been as well over the last years and where it's gone. And a
Yeah,
company that has
that's
operating cash flow that just continues to double, 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 that's solid always. You know what I mean?
yeah.
Facebook doesn't have a dividend though, but
No, someday they will. When they get too big and they got so much
yeah,
money, they're either going to have to spend it and try to make acquisitions, which don't always work out, or just pay that dividend. Now, Warren Buffett doesn't like dividends. Berkshire Hathaway has never, well, I think they did once, and he jokes that they paid a dividend once in like 1967 when he was in the bathroom, and he corrected it. But the reason he doesn't like it is because dividends are taxed twice, once at the corporate level, and then we pay taxes on the dividends if you hold it inside of a taxable account. So he doesn't view it as tax advantaged way of returning value to the shareholders. So he would much rather spend that money making smart acquisitions to grow the company and then buy back shares, which Berkshire Hathaway, they have that
yeah.
ever shrinking share base, which that's another great way. Another thing that I love seeing from companies is when they buy back their shares. I know there was some talk in the news of the US potentially having a 1% basically tax on share buybacks. I don't think that's going to happen, but
That would
Nancy
hurt that
Pelosi's
would
got a
hurt the
lot of,
institutions.
yeah, that would hurt. Yeah, that would hurt them. And so I don't know. I don't think that's going to happen, but yeah, man, free cash flow is king. That's one of my favorite numbers to look at is the free cash.
And also, yeah, and you're saying those companies that are offering those overly high dividend rates. So, just a quick question: like, what would you say is like a dividend yield that's too high? Like a little sketch, because I know, like for me, like AT&T is pretty high. It's like 7 or 8, and
Yeah.
that's probably as
Yeah.
high as I would personally go. What do you think, though? You're the dividend
Yeah.
guy.
For me, that's pretty high. That's toward the highest. So there's companies like, I don't know what it is now, but one of the ones that a lot of people get dividend trapped, they call it, is AGNC. They're a they're a REIT, and I think they're a mortgage REIT. But yeah, if I don't know if what you look at if they show their dividend history. So for dividend histories, I'll either go to Nasdaq or Seeking Alpha.
Okay.
Seeking Alpha would probably be better. Yeah, you can type in their you they want you
Oh,
they
they
want
want
you to
all my
invest.
credit. They
You
want my
clicked on the
credit
ad.
card. Oops, I
You
clicked the
clicked on
ad.
the ad.
Oh no, get me out. There we go.
Yeah.
I
Yeah,
I
you
used
gotta
to have
go.
Seeking Alpha on my what do you call it, on
Yeah,
my
see, it was
phone.
subscriptions. I hate how they there you go. I'd get tricked by that too.
What was the
Yeah,
ticker?
so put it AGNC. And then if you go to the dividends tab, right, yeah, go by summer dividends, and then dividend history. See, there's dividend scorecard. Go up, up, up. Yeah, right there. And then if you click on 10-year, so
Thanks, man.
or
Sorry, I
yeah,
never navigated through this.
go back to that's too far out. Go back to 5-year just to make our
10 year.
prove our point.
Okay.
So those bars, that's if you scroll over them, that's the dividend. So you
Yeah.
see they're at 18 cents, and then they go down to 16 cents. And
12.
now they're 12 cents. So their yield is high. And I don't know if you click on the scorecard. So go back up top by dividend scorecard over there. One more. Yeah, there you go. And scroll down a little bit. So their current yield is 9.78, but I've seen them at 10 and 11%, which to me is just crazy. So this is just one little trick you can do. Just look at their history.
Yeah, they launch it really high and then they slowly lower it to kind of like trick you over time.
Yeah, I guess it's tricking. It's just they try to get people in. I'm sure they mean well and they think they can pay it. But
typically, stocks that have like, I've noticed stocks that do have like the high, like 10% plus dividend yields, their stock usually doesn't perform on the positive side. You know what I mean?
right. Well, and you have to ask yourself something that's funny too. So they're $14.73 a share, but the dividend yield is almost 10%. Why wouldn't investors just pile in and push that price way up for that high yield? It's because they cut it. They don't. Yeah, there you go.
Yeah, TradingView is usually what I look at for technical analysis and all that good stuff.
Yeah, I used to use them. I don't like it as much. I'm more simplistic. I use stockcharts.com, which is,
nice.
Has its pros and cons. But yeah, so what was it? High yield we were talking about. So for me, I love to see something right around 5-6%. That's pretty high and safe depending. But then I always look at the free cash flow. So the dividends paid, and if the free cash flow can easily cover it.
Mm-hmm. And our homie has a question. I'm sorry to cut you off.
Yeah,
our homie has a question about what exactly is the dividend trap again?
Oh, just like AGNC. It's a yield trap.
Okay.
So yeah, yield trap. It's called. They offer a really high yield, and people buy the stock, and they might get it for two quarters or a year, and then they cut the dividend because they can't pay it. And then when they cut the dividend, people, like you can see with AGNC there, they cut the dividend and people sell the stock, and then you get stuck holding a company that keeps cutting the dividend and the share price keeps going down.
This one, since we're on dividends, this is one of my dividend stocks, SPHD. Yep. Are you familiar with SPHD?
Yeah, that's Schwab, I think, right? Oh no, it's Invesco. I was thinking of Schwab has one. It's like SH. I don't know. Anyway, so yeah, it's Invesco. I see that.
Yeah, this one I've had for a couple of years now. This is like, just like I'm not big on dividends, but I knew I should have something that's like dividend related. This one has like a really nice yield. And the stock has done actually good. Like, this was the pandemic. We saw it drop off a hill, and I bought more during the drop, luckily. So I'm stoked on that. Had decent growth over the years and years, and it's comprised of the least volatile and highest dividend yielding companies. So I like this one a lot, and this is one of my top, I guess, dividend stocks. Besides, I guess, Apple, you could say is a dividend stock as well,
Yeah, low yield, but so
low yield, yeah, for sure.
Yeah, that's what these tech companies do. I mean, they're not many of them pay a really high dividend yield. Cisco is okay. Intel, I just started buying. I think Intel kind of reminds me of Satya Nadella with Microsoft when he took over some years back. He just completely revamped the company and turned that company around. So I see a lot of Intel potentially going the way that Microsoft did, but they have a really nice dividend yield. INTC is their,
Okay.
But yeah, I mean, most of them though, like the big ones, right? Yeah, so they've had some choppiness and
oh yeah, all stocks have, like we've seen a lot of bearishness over the market, and I think like this is like turning out to be one of the most bearish Januaries of the stock market history, is what some people have been saying. Like, as far as if it continues this way, by the end of the month, it's going to be the worst January we've ever seen on the stock market. I forgot. I think we forgot to touch base on that though. I think the general bearishness in the market is there's a few things. It's a lot of different things, but one of them is the lack of retail sentiment being there. A lot of the retail investors have kind of pulled out. They either lost money or maybe they just need their money and they just kind of feel tapped out at the end of the year. And another main thing is there isn't really many positive catalysts to look forward to at the current moment. We do have CPI data coming out for January. I believe it's February 10th. And then the next month, March 10th, we'll have February CPI data. And so CPI data is kind of what will drive, I think, sentiment in the market. But even if CPI data comes out, it doesn't necessarily mean we're going to have a bullish market. It's more looking like it could either be neutral or bearish because it's like if they say they're going to raise the rates, that still will be like negative for the market. People will still take that in a bad way, or at least they potentially could perceive it in a bad way. It's not necessarily what the Fed says; it's how we, the retail investor, perceives what the Fed says.
Right.
Yeah. So like, with that in mind, I think a lot of people we saw Meet Kevin sell supposedly his I don't know, it's like millions and millions of dollars portfolio. And he's trying to time the market. So, he's thinking, oh, it's probably going to be, bearish for the next 2 to 3 months, or at the very positive note, neutral. And so, yeah, just be careful, you guys, again, with things like that. It's always good. Like the homie we have here, Dapper Dividends, long-term, consistent investing. Dividends can help generate you that passive income over time. It does take a long time to like build up a dividend account to make it on that level. Like if you can get a dividend account that pays you like 20K a year, like you're making like what is it, minimum wage part-time job, or maybe even full-time job salary right there.
Yeah, I think minimum wage here in the US, if it went to 15, I think I read it would be about 32,000 a year.
Yeah.
So yeah, but yeah, it's funny. If Meet Kevin, I mean, I hope he knows what he's doing, because if this was the bottom, then he would have sold out at the bottom and he would have to buy back in when it's going up. So if that's the thing, you can't time it. And if he was smart enough, why didn't he sell when everybody was still buying? Why is he selling when it's so far down? So nobody knows where this thing's going. People can guess. Everyone has guesses.
Yeah, I think it's just a lot of people are really talking about Meet Kevin doing this because he is this guy that has always promoted, like things like that we promote, buy and hold long, buy the dip, and that sort of thing. Honestly, a part of me thinks that since that guy works so hard, he makes so much content, he might just need like a little break. I noticed because like he does a live stream every morning for the stock market when the stock market opens, and I noticed he didn't do his live stream yesterday or whatever day it was, and I was like, whoa, first time I've never seen him actually do this live stream. And then the next day, the news came out about him selling everything. And so I think he's just an individual and he wants, maybe some time. That guy's well off. He doesn't need to trade stocks. He doesn't even need to have stocks, honestly. He has real estate. He has millions of dollars. And he's just making his own individual choice. And so I think the only lesson take away from this is just when you guys are following someone like a creator on YouTube, investor or whatever, there are always going to be like a large, if you have a big audience, there's going to be a large portion of that audience, or at least a small portion, that follows you exactly to what you do. So he needs to be a little conscious of that. And us as the people, the viewers, need to also be conscious that we shouldn't just blindly follow anyone into any situation. We should always do our own due diligence. Another one of my favorite guys is Financial Education Jeremy. He was there for me like in 2016 when I first started with stocks. He was like the one YouTuber that was there. And I followed some of the stuff he did and it worked well for me, and others didn't work well. And I learned there, I was like, yeah, don't follow everything this guy says. Like, take what he says, learn from it, and apply it to what your own investing strategy is. You know what I mean? Like with Tattooed Chef, I'm sure you've seen him talking about Tattooed Chef for like 6 months. For all of us people that invested in Tattooed Chef, we'd be down big right now. And I am down a little bit, small position on Tattooed Chef, but that's just the example. Like I was not willing to go full blown into it like how he is, you know what I mean? And I actually just bought some Tattooed Chef and ate some of it for the first time, and I actually hated it. And so now
That's not good.
I'm probably going to sell the stock for a loss and
See,
just
now
get rid
that
of
could
it.
have, they always say that you should write down your thesis, even if it's 2 sentences. Every time you buy a stock, write down why you bought it, because then when that thesis changes or it's starting to change, then it's probably time to sell. But back to me, Kevin. I mean, if I think if he should have just, did he just sell it all into cash? Did he say, or
I have no idea. I think he still needs to come out and make another video, maybe probably touching base on it. I'll have to go on YouTube after this and check. It's probably there, knowing him. It's probably there.
he
But
should he should have just put it all into VOO or VTI? I don't know if you guys talk about those. Those are buying the
yeah,
total market Vanguard
yeah.
funds.
Mm-hmm.
Best thing that a hands-off investor could do, just buy the entire market. And it's self-cleansing. It purges the bad stocks and replaces it with good ones. But that's, so I'm not an ETF investor personally. Now, just because I'm always looking at this stuff every day, I'm reading, I'm following, I'm learning, and I just can't justify owning companies that I would never buy individually that are part of an ETF.
Yeah,
Like with that SPHD, I don't know what their top holdings are, so I'm actually
yeah.
probably going to check that out.
That one,
Just
honestly, like I agree with you. You should always invest in the companies individually that you believe in. With SPHD, that one's kind of just a safety one because I looked at its history. I don't really care, honestly, in that one specific situation. I don't really care what's inside the stock. I just like the dividend. I just like what it is, what it stands for, the dividend yield, and the type of stocks that do go into it. Whereas like with like say like the cybersecurity sector, like I
Mhm.
do believe in the cybersecurity sector like heavily, because cybersecurity is going to be huge into the future. Every company is going to need it. We're going to be mostly on the internet, et cetera, et cetera. But I'm also like realistic with myself. Like, am I going to be the guy that's going to find the best cybersecurity company? Because I'm not like a
Right,
tech guy, at the end of the
right,
day.
right.
So
Yep,
in that situation, I might prefer like the cyber ETF, CIBR,
yep.
just to get the sector. You know what I mean? But that's the only case. I agree with you though. Like in most cases, just pick the individual stock that will kill it. Like EVs, I figured it out. I picked Tesla, I picked Neo, and I pick
Yeah.
FCX, and that's how I normally do it. But for sectors I'm not comfortable with, which the only sectors I'm not really comfortable with would probably be like cybersecurity and like the pharmaceutical sector. And those are like the two I kind of just like, if I do buy them, I'll buy an ETF or China. I did have a China ETF, but I honestly got rid of that. I had a China ETF that had a dividend, and so I was like, oh, this is cool. I have Alibaba with a dividend. But we saw what
Yeah.
happened to Alibaba, dude. Oh,
Yeah, I actually, Alibaba, I've been buying them. Yes, it's been a minute, but yeah, they're not going anywhere. They're so big. China needs them. They're just such a big part of their country. They're just changing what they do with the money socially. But yeah, Alibaba's not going to go away. And I still think that they one day will be back up around, 280, $300 a share.
yeah, man.
And it's just,
Alibaba is a really good company, and like with what I said about Boeing earlier, like their last time they were this price was back in like 2017. You're getting
yep.
a 4-year discount, 5-year discount right there.
And they're not, they get pegged as the Amazon of China, but they're they're so much more than that. They're like the Amazon, the PayPal, the Uber, it's crazy.
Yeah,
They're the
they're big.
MasterCard. They're just such an part of China's economy that everybody uses.
Hmm.
But yeah, I wish they paid a dividend, but it's
Yeah,
okay. So that,
that's a whole nother like can of worms. The whole government of China, they're basically like they're like beating up their own companies over there, because the government wants to have more power. Is what I got the summary basically type deal. You know what I mean?
well, I,
The,
I think they're heavy-handed trying to curb some of the social, I guess their way of dealing with social justice. They see companies like Alibaba making all this money and they're saying, okay, you're going to use some of your profits for education and for helping people and
yeah.
distributing back to the people and not just keeping it within your
Well,
company.
that's
But like
good
I
from
said,
that perspective. That sounds good.
yeah, yeah. But that's the way they deal with it because they're a communist government. They don't have to go through voting and, the both sides
Mm.
squabbling and trying to get a bill passed.
So
No,
that's why
China
people
pretty
are so
much.
angry about it.
Well, and that's why people were freaked out, because they could just one day say, okay, you're no longer a publicly traded company. They could nationalize Alibaba if they wanted to, but that would that would wreck the company.
Yeah,
So I don't think
totally.
they're that. I don't think they'll do that. But yeah, that's why people, and it is a bit of a risk doing that. So, but they do it here in the United States too. I mean, they have the
Yeah.
antitrust laws, and companies get hit with antitrust, just like they're going to do with Microsoft buying Activision Blizzard. I mean, that they're,
I
of
heard
course,
about that.
the competitors are crying monopoly, and they're going to investigate it. And I'm sure they'll lobby Congress, and they'll allow it to slide through.
Yeah,
But
totally.
it's
Yeah,
just a different way of governing.
whenever you buy a China stock, you always gotta kind of like anticipate you're paying a premium because it is like that overseas company. You don't really have, like you said, any day the government could nationalize the company, and then boom, your shares could just potentially disappear. So yeah, that's the one risk. But Alibaba is definitely like the number one China stock.
Oh
JD
yeah.
I think is a
Yep.
good one. I'm not sure off the top of my head because I haven't looked at it in so long.
10 cent.
And
Well,
Tencent.
actually, I think I may take that back. I think 10 cent is Korean. I don't know. I don't think they're
Maybe.
China.
I feel
I take that
I
back.
don't know 100% either. I thought they were China though. I'm pretty sure they might have some Korean investments or some diversity or something, but
See, I need to be better educated. We don't know everything. That's
oh
yeah,
yeah,
I
there's
love
so many
looking at it like
stocks,
that.
man. I I can't look at every single stock every single day, you know what I mean? But the ones you got to stay up on the ones you are investing in, that's for sure, you know what I mean?
Well, and
Um
that's what I've always thought. When I put money into it, then I follow it really closely, because I think I'll do my due diligence before, and I'll do a little bit, obviously. But once I have actual money in the company, then I really start following it, just looking always for news. I have the Yahoo news feed, so anytime something happens, you get pinged.
mhm.
Um,
Same.
yeah, so I mean, once you put money into something, just like anything, once you invest, now you're going to be more.
Speaking of those pings, dude, I was this morning when I was on my phone, I just kept getting pings. PayPal hit 52-week low. ARK Invest
Uh,
hit 52-week low.
yeah,
This
yeah.
company hit 52-week low. I feel like the Robinhood pings, those are all pings from Robinhood. I feel like Robinhood is like trying to get those retail investors to sell. It's trying to like scare you, man. It's like it's almost scary for like I feel like a new guy looking at it, you know? They'll be like,
That's
"Oh
a
my
great point.
god,
Yeah.
it's 52-week low. This is scary. I need to sell my stock." You know what I mean? It should be like 52-week low with like a smiley face, like buy. You know what I mean?
Right. Well, Benjamin Graham, in his Intelligent Investor book, one of the quotes I love from that is, he said, the talking heads will try and scare people, whether it's intentional or not. So when the market, like today, I think the NASDAQ at one point was down 4%. So they'll just say, market's crashing, it's down
Yeah.
4%. So no, you shouldn't look at it that way. You should look at it as the market is 4% less expensive than it was yesterday. And just that
Yeah.
simple reframing makes you think like, oh yeah, it's not the end of the world. It's literally just the sale. And, I mean, you can't say that for every company and just draw a blanket statement, but companies that are solid and have good businesses, they will recover. So that's why, I just love buying companies that make money. And I, the biggest gains are made from companies that currently don't make money, because you're speculating that one day
Yep.
they will,
Yep.
which is why I'm buying. So that's why you talked about strategy, because I'm a little
Mm-hmm.
bit older. So I want to buy companies that are spinning off a lot of cash, or they're taking in a lot of cash and giving it
Definitely.
back. But there's PepsiCo isn't going to go up, 20% in a month. I mean, unless
Mm-hmm.
they cure cancer or something.
Yeah,
So
you need
that's
to
not going to
have that.
happen.
Yeah, and with investing, that's a good point. Like the older you are, the less risky you should kind of be with your money. The younger you are, the more time you have to make mistakes and learn. Be a little bit more
Exactly.
riskier and that sort of thing. For me, like I'm in the middle. But I'm like I like to have like a mixture of everything. Where it's I got some growth in my portfolio, got some value in my portfolio,
Yep.
and got some dividends in my portfolio.
Yep.
And yeah, that works well for me. Like I get a good percent return yearly typically, and then I also have some diversity and security for when the market goes down. And like all I really do is when I think the market's going down, I just sell a portion of all of my stocks. I usually don't sell out of anything completely unless I just give up on it and I don't like it anymore. But yeah,
Yep.
that's yeah. Sometimes you got to cut the bad stocks. You have to learn to cut those stocks. Don't fall in love with them for too long or whatever. And then I usually just load up on cash. Just continue to load up on cash. Whenever you think the market's gonna start is a little overvalued, load up on cash, and then throw it back in when it gets back to some decent buying levels.
Yeah.
That's
See, I
like my
try to
simple
not
way.
keep. Yeah, I try to not keep a war chest just because I'm always thinking of the dividends that I could be receiving and then compounding and growing them faster. So that's one of my drawbacks. So, like on a day like today, I didn't have any cash in there, and these drops they happen so quickly. But
Yeah,
yeah, it's funny you say that. Like there's just so many different ways to invest. There's not one size fits all. And when I've had people in the
definitely.
past say, "Hey, tell me about stocks. What's a stock I should buy?" And I tell them, "Well, tell me about food. What food should I eat?" There's so there. You think of all the people in the world. People have allergies, different tastes, like
Mm-hmm.
just different ways of make. There's a million different ways to eat food. So the same thing is true in investing. Like that's why you have to and you learn through trial and error. And like you said, you should make more mistakes when you're younger with less money and learn these lessons like I've done, like we've
Yeah.
done.
Yep.
And it's just, and you have to figure out what flavor suits you. Just like I found out that dividend growth investing really suits me like a glove. And it's just, I sleep well at night. I think that's kind of the point is what allows you to sleep well at night.
Definitely.
Because when I was buying penny stocks and I wasn't sleep, I was losing sleep. So that kind of got that shift going. And I think
Same,
that could
dude.
kind of be the just whatever it is, hey, if you YOLO into Dogecoin and you could sleep sound at night, sleep like a baby, hey, okay, it's probably right for you
Yeah,
then,
yeah. There's
I
some
wouldn't.
people that
I
can. I had a roommate, me and him were both investing, like starting out, and he was high risk, high reward. And I was like, I was still making swing trades, but not with like options really, just trying to like learn. And I took a lot of losses just learning and whatnot, and watching him continue to this day, still doing the stuff he's doing. It's crazy. It's a lot of stress to be like putting thousands of dollars on the line on a weekly to daily basis through short-term trades. And yeah, man, it can be very stressful. But for other people, that might be the way they make their money. That's just the way they like to make their moves. And that's just the way it is. No,
Yeah, I
good
don't
for
I don't
them.
want to
Good
be
for us.
checking. Yeah, I don't want to be checking my phone every 5 minutes.
Yeah, that's how
That's
I
why
was when
I
I
love
first
my.
started, man. Just you wake up, you check the phone, you're like, I'm up, and you react to it. You're like, I'm down, you react to it. Now it's like you look at it and just ignore it and just
So
just
like
move on.
this board behind me, I started sharing. This is just one portfolio I started building again in 2018. It's just the bridge. This is one portfolio of several that we have, but I share it. And it's funny because every time I go on, I update the current value. But what's funny is the PADI, the projected annual dividend income, that's never going down. That's always going up. So that's why I may drop $2,000 in a day or something on the portfolio, but I'm so concerned with my dividend income number that
So
as long as that stays the same and keeps going up, I'm sleeping like a baby.
nice, man. That dividend number, that 2,400, is that
Yep.
paid? How often is that paid? Is that yearly or
That's the cumulative year for the whole portfolio.
okay?
Obviously, there's companies they pay at all different times. They all pay
Yeah.
just about all of them pay quarterly, so every 90
Where do
days, but just
you
because of the cycles.
Where do you track that? Like, do you use a website or something to track all your
Yeah,
dividends?
so Simply Safe Dividends
Simply
and
Safe
then
Dividends.
.com. Yeah, and then Charles Schwab I got off of Robinhood about late 2019, I guess, because I wanted something a little more in depth. And yeah, so
Nice,
I
dude.
got into got Charles Schwab. But yeah, Simply Safe Dividends. I have a portfolio, and then on my website you'll see DeGrin. That's where I display this because you can't view them on.
What's
I'll
your
do a
website, homie? I'm gonna drop the links for that in our community for
just
people.
dapperdividends.com.
Dapperdividends.com. Awesome.
Yeah, yeah.
Cool, man. I appreciate you coming on tonight, Russ. We're getting close to the end of
Absolutely.
the show. I know you got to go eat some
Sweet.
dinner with your fam and stuff too. I think
No, I
last.
ate dinner, dude. I ate dinner. It's my wife. So
Oh, you gotta
I,
go hang out with the wife.
my wife and I have been together since the year 2000.
Nice,
And we
dude.
didn't get married. We got married in '05, but we always make time at the end of the day for each other. So the
That's
last
good.
hour before we go to bed, we have a couple cocktails and we watch a show. So I watch 1 hour of television a day and it's with
Nice.
my wife. And it's at the end of the day, we watch the show and go to bed. And that's how we wind down our day.
Sounds like a good time to me, man. Well, I think
Yeah, yeah.
I give the homies one. I'll give them one last question. So, like,
Sure.
you love dividends. So, can you recommend? I mean, again, we're not financial professionals. We're just here
Yeah.
talking and spieling. You guys do your own thing, watching out there. But what are your like top three? I guess you could say you can pick stocks that you love like dearly forever and you've
Mhm.
loved them for years, or you can also pick a new stock that you like really are interested in hyped on right now. But what are like your three main stocks right now that you're interested in that are like stocks that you if someone came up to you was like, man, what three stocks could I just, buy and hold forever type deal? Like what are your favorite ones?
All right. Well, I'll give two old and two old and one new. So the old ones are PepsiCo. I had wanted to get into them for years, but I always felt it was overvalued and expensive. So that's when I decided now almost 85 weeks ago, I said, all right, I want it to be a core position. I'm going to buy one share a week till I get to 100. And when I get to 100, I'll start selling covered calls on it, of course, to bring in a little bit extra, more income.
Mm-hmm.
So PepsiCo,
Nice.
they bring in more revenue from food than they do from beverage, and not a lot of people know that about them. So 55% of their 2020 revenue came from snacks and food like Doritos and whatnot.
Yep.
And then keeping with food, I mean, there's so many companies, but if I have to pick, I'd probably pick McDonald's just because they're everywhere. they're there's always people inside of McDonald's. I think they have over 30,000
That's a real
locations or
estate company, homie.
13,000. Yeah. So
They're a real
I
estate.
forgot. I brain fart on the number, but yes, they own all the property and they lease it out to the franchisees. So they are probably the biggest real estate company in the world, which is
Mm-hmm.
another reason that I love them. And
Yeah,
they
dude.
feed 1%. They feed 1% of the world's population every single day.
Whoa.
So that's a stat they
Yeah,
probably
they're
put
they're
in there.
worldwide, dude. You can go to freaking Thailand and go through the jungle, ride on the back of a truck, and literally like climb a mountain, and there'll be a McDonald's right there.
Yeah, and then the new one, this one I just started buying at the end of 2021 was Intel, and it's
Intel.
just because of the chips. The government wants them to be successful here in the United States, and they're going to be opening up a foundries to potentially make chips for their competitors as well. So like Nvidia and Qualcomm and companies like that. And they really want to take down Taiwan Semiconductor, which they have about half the market cap of TSM. And there's issues with China, and people worry that one day China will reclaim Taiwan. And if that
Yeah, that's like
happens,
happening
who
right
knows?
now, isn't it? A lot of people are freaking out about that, I thought, in the last couple of
I don't know
weeks.
about, I know Putin with Russia and the
Yeah, and
Ukraine,
there's a Russian
but
thing too.
yeah,
Russian war.
I know there was some saber rattling with I think that died down a little because honestly I haven't looked at it in a few weeks.
Yeah.
But yeah, that's definitely a risk with people who own Taiwan Semiconductor.
Nice,
So
dude.
those are three: PepsiCo, McDonald's, and Intel. I like them.
Oh yeah.
Not financial advice. We're just knowledgeable individuals.
Oh yeah, Russ. Well, man, thanks so much for coming on tonight's stream, dude. I'll definitely
Yeah.
be dropping. Make sure you guys check out Russ's YouTube channel. The links are in the Discord. Dapper Dividends. You can find him on
That-
YouTube, and then also look up his website, dapperdividends.com. What do you have on that website? I mean, I should just pull it up right now.
Yeah, so I revamped it. I started it and it kind of died. And literally at the end of 2021, I wiped it all out and I started again from scratch. So I have maybe 7 or 8 articles up that I've written. We have a podcast too. I do once a week, so
Nice.
all over the place.
Oh yeah, dude.
But
This
yeah,
is
so
awesome.
Yeah, just some articles, and then I got the portfolio on there. There's a my portfolio tab. It's still a work in progress, and I don't have as much time as I was telling. I leave the house early. I'm a welder, so I'm gone for a long
Nice.
time, and I'm not in front of a computer till I get home.
Mm-hmm.
So yeah, just when I have time, adding to it, writing articles
This
every
is
now and
cool,
then.
man. This is great. This is definitely great for anyone that's following you, trying to learn from you. Definitely got a lot of cool resources over here. I'm gonna have to see how to make all this stuff. Learn from you, man. Pepsi
Yeah, I
looks
should
like
start doing.
Pepsi's your number one. It looks like, right?
Yeah.
Pep
Oh,
on
did
the
you go into the
bridge.
portfolio? Yeah.
Yeah, on the bridge
Yeah.
portfolio.
Yeah.
I'm looking at it right now.
Yeah. Digrin. Yeah. Yeah. So that's not a great tactic. You probably want to keep something not to go over 10% on the high end, but I have a, plan and a purpose. And again, this is why you need to know what you own, because I plan on holding Pepsi for 30, 30 years, 40 years. I mean, unless something crazy happens with the company, I don't think I'll ever sell, and I'll pass it on to my relatives when I die, and they can try that new
Mm-hmm.
Pepsi coming out in 2088.
Totally, man. Yeah, it was great talking with you, Russ. Hopefully we can have another chat again. I definitely can see. I have a lot more questions, but definitely I think
Sure.
we got to cut it off here.
Yeah,
Um,
I think so.
yeah, man. But thanks so much, everyone, for tuning in. YOLOs and Laser
Appreciate it.
Technician, Azudi, all the homies out there. We'll catch you guys on Wednesday's episode. Should be live at 7 p.m. PST. And everyone, again, go check out Russ's socials. He's on Instagram, YouTube, has a website. I'll drop that all in the Discord for you guys too as well. Russ, anything else you want to say before we head out, homie?
Know what you own.
Know what you own. No, exactly. Warren Buffett right there. All right, homies. Everyone have a good night out there, and we'll catch you guys on the next one. Peace, homies.